What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis, including money, investing, the stock market, daily news, and what's going on here on a daily basis. If you haven't subscribed to our YouTube channel yet, make sure to click the subscribe button down below. It's completely free to do so. Also, thanks for hitting the like button for us down below. Democrats are pushing the reconciliation as the next tool to fight inflation. The reconciliation package, also known as the Build Back Better package, or possibly the next stimulus package, could or will have multiple different items that could put money in people's pockets. Remember that the reconciliation package was the last package that had the $1,400 stimulus checks that was passed last year. It also included $1,400 for adult dependents and college students who didn't even receive checks from Stimulus Check 1 and Stimulus Check 2. It also had rent assistance up to $40 billion that went out to all the states, $9.9 billion in homeowner assistance, and the child tax credits that was $3,000 to $3,600 that went out in monthly checks to children. Now remember that those monthly payments for the child tax credits went out from July through December. That was only half the year. To get the other half of the payments, you have to file a tax return. So remember, you're still owed the first half of the year in monthly payments. You have to file a tax return to get that. So if you're not a normal tax filer, if you don't normally file taxes, you want to file a 2021 tax return anyway with the federal government, the IRS, okay? Because you're still owed $1,500 to $1,800 per child, the IRS says. You can just literally Google this and the IRS will tell you this. So make sure you file a tax return, even if it's a free tax return. You can do this right through the IRS's website that they have. Yeah, you can see here, Biden administration renews efforts to get enhanced child tax credits to low-income families. They have set up free websites, childtaxcredit.gov or getctc.org. So childtaxcredit.gov, you can see here, you can get your child tax credit right here on their website. This will basically file a tax return for you for free, I think in most cases, in as little as 15 minutes if you don't get that money, if you didn't file already for 2021. Yeah, the recent data here that shows that 9.1% inflation compared with a year ago, the highest rise since 1981 and significantly worse than economists' expectations. These figures drew a swift response from Senator Joe Manchin, who expressed caution as he and Senate Majority Leader Chuck Schumer looked to find common ground on components of this next stimulus package. Manchin said, quote, everybody should be extremely cautious because you cannot do a thing right now that's going to add or be inflammatory to inflation. However, a number of Democrats say they think passing a reconciliation bill that increases taxes on some high earners would help reduce inflation. It'll bring more money back into the tax system that they can use to reduce inflation. Quote, what we're doing is cutting costs for consumers that has a real anti-inflationary impact. Cutting medical costs, cutting energy costs, and paying down debt, said Senate Finance Committee Chairman Ron Wyden. This is anti-inflationary, cutting costs for consumers' point of our bill. When problems are paid for, that doesn't mean more dollars have been pumped into our economy because they're paid for. Senator Elizabeth Warren said, when rich people have to pay taxes to help fund programs that help people go to work, that puts more workers into the economy, more productivity, and that drives prices down, not up. Manchin seemed to express optimism about the possibility of reaching a deal on prescription drug pricing and Medicare, but said of additional items, I don't know, but I'm very, very cautious. He also said he wants any bill Democrats aim to pass by budget reconciliation, which means they only need 50 votes in the Senate, which means all the Democrats can pass it on their own without any Republican votes, which is how they passed the last bill, the last stimulus check as well, and also how the Republicans passed a bill back in 2017. The Republicans passed that bill on their own, known as the 2017 Trump tax cuts. They passed that bill completely on their own without any Democratic votes. So what's good for the goose is good for the gander. Both parties use this from time to time when all the stars align in the Senate and they're able to. But the Democrats are looking to do it again before the midterm elections, because after the midterm elections, who knows what the makeup of the House and the Senate and how the actual seats are going to fall. I'll keep you up to date here, but here's what Manchin has to say. Manchin says he wants the bill to also reduce the deficit, which it can. The bill just has to pay for more than it's going to spend, telling reporters that the deficit reduction is going to be 50%. Also, in very related news, the US is posting the first budget deficit in the largest budget deficit, where they're actually spending less money than ever. I mean, there has been a few times in history where the US has had a budget deficit where they're, basically not losing money, but the amounts are unprecedented here. And I'll show you multiple sources here so you guys can, credible sources here. US budget deficit in June sinks 49% to $89 billion. You can see here, this is from Market Watch. Here from Reuters, US June budget deficit down sharply from 2021 as pandemic aid fades. Here from Bloomberg, US budget gap narrowed by record $1.7 trillion since October. So the US has paid down the national debt by $1.7 trillion since October. Wow. That is unbelievable. So it's unbelievable that this has actually happened. Yeah, so you can see here higher tax revenues and the phasing out of pandemic spending has chopped the U.S. federal government's budget deficit by a record $1.7 trillion in the first 9 months of the fiscal year, according to Bloomberg. You can see I've quoted multiple sources here. Bloomberg's pretty credible. I mean, Reuters pretty credible. It's not like I'm quoting CNN or Fox News here, guys. I know that some people, don't rely on them here. But I've cross-referenced this here. Higher tax revenues. So they have paid down the federal deficit by $1.7 trillion in the last 9 months. Wow, it's unbelievable. The Treasury Department says the $515 billion gap for the October to June period compares with the $2.2 trillion in the same period a year ago, the Treasury Department said Wednesday. After blowing out during the pandemic, the U.S. government's shortfall is slimming back down as employment and incomes rise while stimulus spending expires. Receipts rose in the 9 month to 3.84 trillion, with more than half of that coming from individual income taxes. I told you that the government and the states are bringing in a lot more taxes, So this is why revenues are up. One area not helping is the increase of interest rates. So they are paying more money in interest rates. This is why they're not going to want to keep interest rates high forever, but they have to do it. They have to do it to help bring down inflation. Interest rate payments on public debt have climbed to $102 billion so far in the fiscal year. So even the higher interest rates is hurting the government, but they're flush with cash. Most of that rise was due to bigger payouts on the Treasury Inflation Protected Security known as TIPS. which is a pretty decent place to invest money right now. But costs are rising for nominal treasuries as well, which has gone up here as well. So yeah, the government actually able to pay down $1.7 trillion of federal debt, of the federal deficit. Let me know your thoughts here. Did you ever think this would actually happen? Now, I know I'm going to get asked this in the question or asked this in the comments. For comparison, former President Donald Trump, I'll show you this here on the screen. You can look this up here, multiple different sources here. What you need to know about President Trump's impact on the national debt. The national debt increased by about 36% during Trump's tenure in just 4 years. So the whole history of our country's national debt went up by 36% in just 4 years. Republican candidate Donald Trump promised during the 2016 presidential campaign that he would eliminate the nation's debt in 8 years. Instead, his budget estimates show that he actually added at least $8.3 trillion, increasing the U.S. debt to $28.5 trillion by 2025. But the national debt actually reached that figure sooner. The national debt was at $19.9 trillion when he took office in January 2017. It reached a high of $27 trillion in October 2020. So you could see here it went from about 20 trillion to 27 trillion in before he was even out of office. The national debt reached a high of 28 trillion less than 2 months after Trump left office. Yeah. So he said he would eliminate the national debt. Instead, it was projected he added at least $8.3 trillion to the national debt in about 4 years. Yeah, so you let me know your thoughts here in the comments. We'll have to see how Biden ends up. You know, the national debt, I've always said national debt doesn't concern me that much because it's a number that's just kind of out there. It doesn't affect people that much. Back in the 1990s, the national debt was like 3 or 4 trillion. Now it's around 30 trillion. The national debt does not really affect us that much, whether you're Republican or Democrat or whatever. Inflation affects us. That affects us. Gas prices affect us. Um, you know, those type of things affect us. If you have stocks, if you have money in your pension, those type of things affect us. Wars affect us. These type of things affect us. Things like gun safety affect us. Women's choice affect us. Whether or not the government does things that actually affect you, put money in your pocket, those things affect you. The national debt does not really affect you. You let me know your thoughts here in the comment. National debt does not really actually equate to inflation because it really just doesn't. Because, at the end of when Trump left, and I'm not defending Trump or Biden here, either one of them, but like when Trump left office, inflation hadn't really kicked in yet, and the national debt was around just under 30 trillion. Inflation hadn't really kicked in yet. Okay, it was getting ready to. We were starting to come out of the pandemic. It was getting ready to kick in. But remember, in 1990, it was at like 4 trillion. We had gone from 4 trillion to 30 trillion. Okay. And we have seen some ups and downs in inflation, but remember, it was back in like 1981 where we had that 40-year high of inflation. We go back to there, and then we kind of had, interest rates actually went down throughout all that time. That was the last time we had inflation really bad, really, really, really bad, is back in 1981. Okay, but really since then, inflation really hadn't been that bad. Okay, so really remember the deficit went from 4 trillion to 30 trillion, and inflation wasn't that bad during all that period, right? For the most part. So that shows you that the national deficit does not really correlate with inflation. Okay, that's why I've always said don't really worry too much about the national deficit. I'm 41. By the time I'm 81, hopefully I make it there. The national deficit could be, instead of 30 trillion, it could be 60 trillion or 80 trillion. It really just depends on how the government does. I mean, they're running a deficit now. They're reducing it, but I don't think that's going to last forever. I just don't. I just know how our government is. I mean, good for them for reducing it for now, but I just don't think it's going to last forever. In fact, I'd rather see them use that money and use it on people in need, on programs in need, use it on food assistance, use it on rent assistance, use it on stimulus checks, targeted stimulus checks to help people in need. I mean, you look right now, there's about 60% of people living paycheck to paycheck and struggling. 50% of people retire with no retirement savings. They only have Social Security to look forward to. We're seeing 40-year record high inflation, and Social Security is not enough to support people. And we have a bill in Congress right now to raise Social Security benefits significantly. Okay, by one, $2,400 more per year, and two, to $1,415 per month as a minimum benefit, and three, actually, to raise the cost of living adjustment to a new index, the CPIE, the Consumer Price Index for the elderly. There's several different things in that bill that would benefit us. That would benefit us. And I say me too. I'm 41 years old, but eventually I plan on being on Social Security. I plan on making it there. Hopefully you do too if you're not there yet. But Social Security is something we all pay into. It's something that we all pay into. It's something that is it's like a pension. If you don't have a pension, my dad worked at a grocery store for 40 years. He got a pension. He was one of the lucky ones. But 401ks are a new version of a pension. You basically put money in, and it's there for you later. Pension is actually the exact same thing roundabout. A lot of people don't understand this, but a pension. So, for example, my dad's pension, he worked at a grocery store for 40 years. They took money out of his paycheck every week or every 2 weeks, however he got paid. Okay. They took money out of his paycheck. So, his paycheck, he took money out to put in his pension. So, it was basically just like a 401k. If you have a 401k, you want to do this. Okay. You want to make your own pension. It's the same thing. You take money out and put in your 401k every week or every paycheck. It's the exact same thing. It's the exact same thing. You put money in your 401k every paycheck. My dad did the same thing. It was just called a pension. Okay. But every paycheck, they took money out of his paycheck to put into his pension. It came out of his check. Okay. And then the company had a match. Does that sound like a 401k? It's basically the same thing. It just has a different name. A lot of people don't realize this, but if you're not putting money in your 401k, you need to right away. You can't retire with just Social Security because a lot of people get caught and it's just not enough. Social Security wasn't designed to be enough for you to survive on. It's unfortunately it's just not enough. Hopefully, we see some bills come through to raise it. But if you have the opportunity to, if you're working, if you're not retired yet, invest in yourself, invest in your 401k, invest in your IRAs, put money aside, save money. I know a lot of people are going to say, Jimmy, I have no money to save. I can't save anything. Save a little bit. Save 2% of your paycheck because what you're going to realize is if you're spending money on anything else at all, if you're spending money on lottery, a little bit of money on lottery, I know a lot of people that do that, right? My dad does that. A lot of people do that, right? If you're spending money on anything, whatever you're doing for anything that's like not necessity, spend a little bit of money on yourself and save it in your pension, in your 401k, right? And what's interesting is you actually pay less taxes on that because whatever money you put in your 401k is pre-tax money. You actually pay less taxes because you do that. So you're going to give less money to Uncle Sam. So when you put that extra money and save it for yourself in your 401k, you're going to save more money in taxes. So it's a double win. It's actually a triple win if your company gives you a match. Because what they're going to do, every $100 you put in, they're actually going to give you a $100 match. So it's free money and you're going to save tax money. So you're like winning, 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 winning. And that should be my next sign here. It should say winning, winning, winning. But a lot of people don't put any money aside ever, and they work for 10, 20, 30, 40 years, and all those years roll by and they just nothing gets saved. But if you just save 2% of your paycheck, if you just start off by that, and then maybe raise it a little bit down the road, that money will grow and grow and grow and grow and grow. Just put it in like a stock index, like a Vanguard 500 index, just an index of like an index is just like it mirrors the stock market, okay? And I know the stock market's down right now, don't worry about it. Stocks do this all the time, right? But over time they grow. You just put a little bit, you put it in every paycheck, you just put it in. And an index is just like you own a share of like every stock out there. Okay. You're going to own a share of everything, the whole, the whole stock market, basically. You own a little fraction of everything. Okay. And this way you don't have to worry about one specific stock going up or down or anything like that. Okay. So you're going to own a share of Apple, a share of GE, a share of Ford, a share of everything. Share of Tesla, you want a share of everything. Okay, it's just like the Vanguard total stock market. Okay, if you have something like that, it's great. Okay, and this way, you don't have to worry about everything going up or down. When it goes down, it's actually a good thing because you're buying low. So when it goes down, you're like, yes, it's on sale. When my paycheck goes in this week, I'm buying low. I'm buying low. So when it goes in this week, you're like, yes, it's on sale because you're like, I'm not retiring for years. It's cheap. Buy low, sell high. So if years later when you're in retirement, it's gonna grow, it's gonna grow, it's gonna grow, it's gonna grow. If you look back at what the stock market was years ago, it was a half of what it was now. It was a third of what it was now. So your money's tripled. Even though the market's kind of low now, it was fractions of what it was years ago. And this money just grows and grows and grows. Trust me, the of Dow was, half of, even so you look here. Okay, here's the Dow Jones index, okay? It's at 30,600, okay? 5 years ago, it was at 21,000. So for round numbers, we'll just say 5 years ago it was around 20,000. Now it's around 30,000. So it's gone up by 50% in only 5 years. In only 5 years, guys, your money's gone up 50%. So if you had $100,000 in your 401k, it's gone up $50,000 in only 5 years. And that includes this massive drop here in 2020 or 2020 when the market cratered from the pandemic. Okay. It still went up 50%. And that includes the big drop that we've had here in the last several months that everybody's been all scared about, right? These are normal. These are normal, guys. When you look at a chart here from, this is a 30-year chart, okay? 30 years ago, the Dow Jones was at 3,000, 3,200. Now it's at 30,000. That means your money 10x'd, 10x'd. So that means if you had $100,000 in a 401k, it's now worth $1,000,000. Or that means if you put a $10,000 in a 401k, it's now worth 100,000. So this is why you just put a little bit of money in over time. You just put in, a little bit of money in every paycheck and it grows, it grows, it grows, it grows, it grows over time. This is how people get rich over time. And you don't take the money out. You just let it grow. You let it grow and you keep putting money in. This is how you accumulate money over time. Hope that helps. And if nobody ever tells you this, you'll never know it. And if you never save part of your paycheck, no money will accumulate over time. Just save a little bit or as much as you can. It's tax-free money. You'll pay taxes on it way later on when you're in retirement. Don't worry about that. Okay? And you'll save money on taxes now. So you save money on taxes, save money, and it'll grow to a huge nest egg later on. You could thank me 20 years from now, or 5 years from now, 10 years from now, 30 years from now. And if you get a company match, they're giving you free money. They're like, here, free money. Would you like this free money? If you don't save it, if you don't save any money, we're not going to give you this free money. Sounds like a good deal. But if you don't save nothing, nothing will grow and you won't get free money and you won't save money from the IRS. You won't save tax money. You'll pay more taxes. Would you rather pay more taxes or save money and get free money? This is how this is simple strategies, but if nobody ever told you this, and people get scared of the every time the stock market goes down, people get scared and they sell. Don't do that. Don't do that. Just let it grow. When the stock market's down, just keep your weekly buying going because it's great. It's on sale. So let me know your thoughts here in the comments. I'll keep you up to date here. Don't sell when it goes down. Just keep buying. It's a good time to buy. Buy low, sell high. Just keep going. It'll go back up. It'll go back up. It might take a little bit of time, but that's okay. You're going to keep buying your weekly thing. So make sure to subscribe down below. It's completely free to do so you don't miss out on new videos. And I'll keep you up to date here with everything going on here in our community and on our daily basis here. You can click here to watch my newest video next. And you can click here to see my newest stimulus check video that are going out to millions of people here across the country. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.